Good morning, everybody. Welcome back to another episode of The Market Open. It is November 7th, 2023. It is 8:45 a.m. We are here on another day on planet Earth with a market that needs to be open. And I would just like to ask everybody a question. One, do you see anything different about me today? Is there anything you see different about me today? Okay, I'll give you the answer since none of you guys can figure it out. We got a new shirt, folks. We got a new shirt. New month. We're in November. 2 months left into the year. I was like, you know what? We need a new shirt. So this shirt, it has like parrots and flowers on it. And I saw it. It was on sale. It was like 80% off. I was just like, all right, or not 80%. It was like 40. It was $45 retail. It was like going for 15. I was like, you know what? We're getting a new shirt. So new shirt to the new start of a new month. And we have 2 months left of the year, which is absolutely insane for the fact that we have an entire 2 months left of the entire year. We got a lot to talk about this morning. This morning, we will be discussing Uber earnings that really didn't do as well as the market wanted them to do. We will be discussing WeWork filing for bankruptcy, once valued at $47 billion, now valued at about $100 million. They're leaving the marketplace. We're also going to be talking about a risk of recession coming sooner than we thought it would, as per yesterday's news about Warren Buffett raising a lot more cash than expected. We're going to be talking about OpenAI that essentially said, look, we are going to take over the AI marketplace yesterday with their announcement. Question that I have is, where the hell is Google with OpenAI making some of these announcements? And on top of that, is OpenAI truly creating the next what will be iOS app store for ChatGPT type products? And then we're going to talk about Shein, which is a Chinese company seeking a $90 billion valuation in their IPO. So we got a lot to talk about today, a lot to discuss. And then on top of that, we got to start off the day with Palantir. I think some of you guys know what news we're going to be talking about Palantir, but we're going to talk about Palantir in the beginning as well. Let's do this today since we haven't done this in about 2 weeks. Comment where you're watching from. So as I read the names, I'll read where you guys are watching from. This is always a fun thing when we do it. We do this like once every couple of weeks. Comment where you are watching from. It's always fun to see where everybody's at and how they're enjoying the show. Van Bush says, nobody can time the market. My suggestions, lay back, relax, and enjoy amidst show. I love that suggestion as well. Benny says, why is he starting 15 minutes after the market opens today? Benny, if you're being serious about that question, it's because you have not adjusted your clock for daylight savings, which is why you think I'm starting at 9:45. But actually, and I haven't adjusted my clocks either. That's like, thank goodness the iPhone adjusts its clock by itself. But my car, my kitchen downstairs, everything says I'm an hour late. So I feel you if you're in the same position. Okay, let's see where everyone's from, and then we're going to start off with the show. Erwin from Boulder, Colorado. Shout out to Erwin. He texted me yesterday when the stream was sucking. He was like, dude, it sucks. And I was like, yeah, you're right. I got to fix this. I'm going to try to get the Ethernet by Friday this weekend. Warsaw, Biscott Cat, thank you for being here. Kane Frost, my car. That's awesome. I hope you're enjoying from your car. Colin from Bulgaria. Triple Chevys from Los Angeles. Simon from Denver. We got another Colorado in the house. Jason from Houston. Andrew from Canada, Drew from another Denver, Colorado. Oh, we got some Colorados in the house. Oregon, Estonia, Boston, Czech Republic. Andrej, what's up? Thank you for being here. Michael Martin, Kingston, United Kingdom. Chris, work office in New Jersey. Okay, this is my office in New Jersey as well, so we're both at work. New York in my car. John Stevens from Wisconsin. Malix from California. Dexter, you look amazing. Thank you, Dexter. Dexter from Singapore. I know where he's from. Marcus from Sweden. Mexico City, Montreal, Emmanuel, Miami, Philippines, Perth, Texas, Columbus, West Beach, Florida. I love it. Thank you all for being here. It's so awesome to see everyone from different places around the world all coming together to discuss one simple thing, which is that we're about to lose a crap ton of money on Palantir. Ladies and gentlemen, that is the first topic for today. We are going to lose a lot of money on Palantir. And the reason for that is not because AIP growth is not that good. It's not because Bank of America upgraded them from $18 to $21. I'll be talking about that later today in the Palantir Daily episode. It's really because, you want to know why? You want to know why we're going to lose a crap ton of money in Palantir? Well, our good friend, Mr. Jim Cramer, went on CNBC, and I cannot make up what he said. He said, and I quote, I am on the Palantir train. You might as well call me Mr. Palantir for all I'm concerned. For those that missed what Cramer said yesterday on Mad Money, he spent a good 30 seconds talking about his love for Palantir. And that love for Palantir ended up being this quote: I'm on the Palantir train. I am Mr. Palantir as far as I'm concerned. Now, I can take this in a facetious sort of direction and talk about how, this is horrible for the stock. We're going to lose money, blah, blah, blah. It's really bad. But I'm actually very serious. We're going to lose some money on this stock. Like Jim Cramer 2 weeks ago said this about Sofi. He was very impressed with Sofi. Even this was before their earnings. And then Sofi puts up a triple beat. But because you've got the Cramer stain kind of on top of you, as for 2 weeks of him just being super bullish on Sofi can't catch a break. I mean, Sofi's trying to recover. Sofi 717,000 members is not enough. It's down 0.27% of the pre-markets. So, Palantir right now, as I look at it, it's actually up in the pre-markets, 1859. Somehow, if Palantir overcomes Jim Cramer's well wishes, it's like that. It's like, you tell someone your cousin's sick and like, oh, I wish them well. And you just look at them and you're like, you don't wish them well. You don't actually care about them. Jim Cramer really, he wishes Palantir well. He's on the Palantir train. He said it was a monster quarter. He called himself Mr. Palantir. If Palantir can overcome this, I think we can overcome anything. And I genuinely believe that. Because Jim Cramer's never been this. He's been bullish before, but he's never been this bullish. And what's really funny is in May, if you guys saw him before he did the interview with the Jacobs CEO, Jacobs was one of the big clients of Palantir. The Jacobs CEO set his ass straight and said, hey, buddy, you really got to think about Palantir. He didn't even think it was a real company. Andrew Ross Sorkin, his fellow co-host on CNBC, interviewed Alex Karp, and he was like, hey, what do you think about Jim Cramer thinking that you guys aren't a real company? And Karp just started laughing. He was just like, I don't know what you want me to say, Andrew. Like, there's not that much I can say. So if Palantir can overcome this, that'll be really nice. Lunar says this time it's different. He sees profitability. That's true. Profitability is there. So that's one of the reasons why, maybe we'll be okay and Palantir will survive this, but maybe we've got some more pain coming. In all seriousness, I'm having a lot of fun here. I don't know if the Cramer thing really means anything. It's just like a random thing that people in the stock market talk about. I think Palantir is profitable. I think Palantir is growing. And I think that's why Palantir still is up 30%. As of last week, it's like 28% now. Is the valuation getting a little tough at $40 billion with only $72 million of net income? Yes, 100%. The valuation is getting a little tougher, but you got to look at some of their peers. Databricks, private company, 43 billion, Snowflake, about 48, 47 billion. So you could argue the valuation is getting a little up there. Bank of America and their price target is from $21. That is for 2024. So I was reading the report this morning because that was one of the main focuses on the video that I'm putting out today. And Bank of America basically said, look, we have a 1-year target on Palantir at 21. We're bringing in that 1-year target today. So we're assuming another, call it $2.5 billion of revenue in the company to justify the $21 price target, which means Palantir, basically over the past, basically Bank of America is assuming like they bring in a lot more revenue. They continue to remain GAAP profitable. They have a lot more customer growth. And with all of that factored in, so think of 2023 to 2024, the next 4 quarters of growth, that's how they get to $21. Well, we're at 18 right now, and $2.5 billion of revenue has not come in the door yet for another fiscal year. So we're very close to their original price target, but that's the nature of price targets. You bring in the price target a year earlier, and then if you get there, you get there and you deal with it. So if you're buying Palantir right now, at least for Bank of America, the upside is $21. And so the question becomes, is this price a little bit tough right now, given the valuation? I think it is a little bit tough. And if we go back to 14, 15, I would love to continue to be a buyer. But we'll see what ends up happening. One of the things I've also been consistent on this channel is that these are generational companies. You don't sell a winner because a generational company will stay overvalued longer than you will have time to wait to buy the dip. It's just the nature of these types of companies. And the reason I say generational is not only just because of the technology and like the growth and all that stuff. It's because people actually give a crap about Palantir. They're excited. They're interested. I mean, I have people texting me all day, whether they're fund managers or whether they're retail investors that care about Palantir. There's something about this company that gets people excited, and people have different reasons all across the world to be excited. And for that reason, people are going to buy the stock, even if there's a little bit of a dip. And as a result of that, you might always have a little bit of overvaluation. So Luna says they went from 500 million per quarter to 600 million guided within Q next year. This is big. Yeah, that is big. And that's why people are going to be excited for the company as well. So that's the Palantir Jim Cramer news. Let's move on from that. We'll see what ends up happening with Cramer throughout the rest of the day, but we should be okay. The Wi-Fi should be better now, and we're streaming 1080p. So if you are not streaming me in 1080p, go to the YouTube thing and click the 720 to 1080, and you should be able to watch me in full HD. For those that are joining, you should be able to catch a new shirt in full HD. A new shirt that I got on sale, by the way. This shirt looks like it's worth $100, right? It's not like a shirt that looks like it's $15. Might have been on sale for $15. Know what I'm talking about? And it fits really nice. Apartment 9 is the brand, APT.9. It's a really good brand. All my shirts are from them. So that is the brand. So you should be able to see 1080p, and hopefully we have no concerns with the Wi-Fi. All right, let's move on to macro. Let's discuss what's going on in the macro. We have a bunch of other news stories to talk about, but let's talk about macro first. 10-year continuing to decline, and we're seeing more signs of deflation, ladies and gentlemen. 4.606 on the 10-year. That's why we're seeing a little bit of a decline, and we're seeing equities do all right. Let me pull up the chart on the S&P 500. Where is that going in the pre-markets? S&P is down just a little bit, 0.13%, not too much. NASDAQ at 13,005. We have to talk about Uber earnings. We'll talk about that in a little bit. They're down 3%. But this 10-year continuing to stay at this 4.604 level. I mean, it's 0.04 away from touching 4.59. We were at 4.558 a couple of days ago. This is going to be good for equities. Again, if these yields are coming down, that means more people are buying bonds. More people are buying bonds, which means that the yield doesn't have to be as high, which means it's not as attractive to take money out of the market and put it into bonds to get 4.9 or 5%. Because if you're only getting 4.5, 4.6, maybe even 4.2, then the equity markets become a lot more exciting. It is concerning what's going on in the equity markets in regards to a variety of factors. One being that 2024 seems like something is breaking, and that's why. Remember, if interest rates come down, it's because something's breaking in the economy. It's not because Jerome Powell wants to make us all rich in the stock market. So one could argue that there is some cause for concern that if bond yields are coming down, maybe, there's a reason people are buying bonds, and that could potentially hurt interest rates. But the counter narrative to that is that inflation is really coming down dramatically. And if that is coming down as dramatically as we think it is, growth stocks like Palantir, like Tesla, will continue to benefit from the decreased cost of capital as interest rates come down as well. But you're going to have to weigh that against the potential upcoming recession, because if we're lowering interest rates, obviously something bad is happening in the economy potentially. So there is a lot of nuance to what we're seeing here. But the number one thing, at least for this potential end of year rally, is that 10-year coming down is really good. There's 5.5 trillion again still on the sidelines. That number is probably lower now, from 5.5 to maybe 5.2. That money is either going to stay in the 10-year, it's going to stay in money market funds, or it's going to come into the equity markets. And we will see where it goes from there. Max says if the yield keeps falling, the Fed will rise again. That's actually not a bad point. I mean, if the yield does keep falling on the 10-year, for all the people that hated the 10-year being at 5%, Jerome Powell was not one of those people. He was very happy that the 10-year was giving you 5%, because then you didn't have the need to put money into the market, because you're getting money from buying up U.S. debt, which means the stock market stays level-headed, potentially even worse than level-headed. I mean, we got to 410 on the S&P 500. We were 10 points below the 200-day moving average. We were 10 points away from 399. Like, to see 390s on the S&P would just be insane. And the bears, there's a couple of bear channels that I follow. They were very excited when the S&P got to 410. I mean, their thesis was playing out. And then that sharp reversal happened over the past couple of weeks when this 10-year fell off a cliff. Could the Fed raise rates if that happens again? I think it really depends on CPI. So that's going to be the determining factor. But we will have to see what CPI has to say. And that's going to be on November 14th. Damn, daylight savings time is making my bedtime even later because the market opened. Sorry for that, Sanjay, but you got to be at the market open. So if you got to sleep an hour later, you got to sleep an hour later. Amit, I'm thinking of doing a wash sale on Enphase. I know others are thinking this too. Would love to hear your thoughts. Could you bring this up on Finance Junkies? For those that don't know what a wash sale is, that's basically you have a stock. Let's say you bought 10 shares at $100. The stock's at $90. So, you're down on that money. You're down $100. You could sell all those shares, take the loss. You could tax loss harvest those, which means you could tell your accountant, hey, I bought these shares. I messed up. I'm down $100. Take off $100 off my income this year. So you can show the government that because I'm losing money, I don't have to pay that much money in terms of taxes. You're only allowed to do this for $3,000 per year as an individual person. And then after 30 days, you can buy the stock again, and it doesn't have any implications in terms of your taxes in the future. So if you buy the stock within 30 days of you selling it, then you're going to still be taxed at short-term capital gain tax, at least in the United States, versus long-term capital gains tax. You want to have long-term capital gain tax because the capital gains goes lower, but you have to wait those 30 days. I don't think in the next 30 days Enphase is going to moon, so I think the wash sale is actually fine. That's my opinion. If in the next 30 days, if by December Enphase somehow moons and you miss out on a lot, then yeah, I guess that's a risk you have to take. But it's at $78. Earnings were not good. Guidance was not good. SolarEdge earnings was not good. Enphase is in a tough situation for a long time. It seems more likely than not that if you did take a wash sale, you could buy back later and you wouldn't be affected too much. But that's how I'm thinking of it, just based on my knowledge of where I think Enphase is going. Overall, if it does go up, then the wash sale wouldn't be that effective. So something you do have to think about there. Let's move on to OpenAI. OpenAI had a basically life-changing presentation, in my opinion, yesterday that I thought was really interesting. So for those that didn't catch the highlights, I'm just going to share this article and I'm going to summarize what they did yesterday. This is a big deal. Bay Race is a good example, but I'm down 50%. I'm down 50% on my 2 Enphase shares and my Roth IRA too. I have a $124 average. So that's, it's in my Roth now. By the time I'm 59, I hope Enphase, recovers and solar becomes a thing. Fucking Carlos and Vitali solar. Okay. Everything announced at OpenAI's first developer event. I'm not going to go through the entire article, but this was the big thing that I think is going to be kind of revolutionary. So you guys know how on the morning stream, I've been basically talking about, I've been playing with LLMs and I've been working on this side project. And I think a lot of you guys will be very interested in the side project. I can have an official announce date to it, January 2024. January 2024, I'm going to announce it. You guys are going to see it. And I think you guys are going to be really interested in it. I think every single person in this chat, quite literally, I think the 19,000 people that follow me on Twitter, the 25,000 people that follow me on YouTube, I think every single person will find value in the side project. It's a small side project. It's nothing too crazy, but I've been working on it. And I thought, it takes me like a couple hours a week just playing with it, tinkering with it. And it has to do with LLMs. And, what ChatGPT announced yesterday is that users can build their own GPTs. And it basically is what I was doing. I was building some form of a GPT model. And I was using some of these open source tools to kind of tinker with it and understand how to use it. And ChatGPT just basically announced the whole thing yesterday, right? So what they announced, which I think is so important to understand because it's huge for Palantir shareholders, and I'll talk about why, and it's huge for the development community writ large, is that with this GPT marketplace, you're essentially able to create your own GPT and train the model. So what GPT is a huge large language model that OpenAI has spent billions of dollars being able to make. If you can take their model and essentially train the model on a certain prompt and or your data. So for example, if you're a chef, let's say you have a YouTube channel, you're a chef, you make cooking recipes over the, every type of different dish that you have, whether it's desserts or pasta or whatever it is. For example, this souffle chef, I'll give you recipes based on the foods you love and ingredients you have. If you have, let's say, thousands of videos of transcripts of all those recipes, and then you have the actual physical recipes, and you feed it into the GPT model and you build your own GPT, you essentially can create let's say the lady's name is Jessica Chef GPT. You can launch that on GPT's marketplace, which is very similar to an iOS app store. By the way, this process takes like 10 minutes. Like, it's very, very simple. I mean, if you saw the demo yesterday, it was just absolutely insane. And then as a result of that, you can put it out into the marketplace. You have your own AI bot. And now people can download your app. People can pay you for that app. You can share revenue with OpenAI, just like people on the App Store share revenue with the App Store for downloading apps on this phone. And now people have a highly tailored, customized version of a personal chef coach because they trust the Jessica Chef that they found on YouTube, and they can start asking it questions. That's a big deal. That's a really, really, really big deal. And so the question becomes, how does that expand? How does that expand the horizon of all these different people across the world that can create their own GPTs? And the way I'm thinking about it is that every knowledge worker on the planet, everyone that has some level of specialized knowledge in a certain niche, whether you're a doctor, a therapist, whatever. I mean, the list is endless because the internet is endless and content is endless. You can create your own custom GPT. And if you can create your own custom GPT and you can use the large language model that ChatGPT has created, but they use GPT-4 Turbo, which is what they announced yesterday, and just modularize and modify the way you want GPT to be constructed with your own data, I mean, how cool could this thing become? The example that Sam showed, Sam Altman, who was the original guy in Y Combinator. Y Combinator is an incubator for startups. He has thousands of videos and lectures on the internet about how to build a startup. He took a bunch of those transcripts on the demo he showed. He fed it into the model, and then he started asking questions about how do I build a startup? And that model, powered not only by Sam's proprietary data around the transcripts, which is the natural language, right? This whole concept is oriented around natural language, but also the actual background knowledge as of April 2023 that GPT has been refreshed for startups and building companies, et cetera. You mix all of that together, and then you give a result to the end user that gets highly specified information that's incredibly important. Lunar in the chat says, you can upload a PDF of a cookbook, add your own knowledge to the model, boom, nuclear bomb, it's Apple Store plus YouTube with AI. This is pretty insane. And the reason I think it's so important for people to understand is because in the context of Palantir, it is accentuating and accelerating the potential for AIP and this idea of having your own proprietary large language model, which is essentially what AIP is for the enterprise, to be adopted harder at scale. The bear case for what people say around this kind of this like ChatGPT open source, create your own GPT in the context of Palantir is okay, well, if a company can do this off ChatGPT, why would they use Palantir's AIP, right? If a company can just build their own information and they can feed it into the model, blah, 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 then boom, you're good to go. The problem is governance, right? Like governance of data and the security of data is very, very hard. Palantir has hosted 2 conferences with major Fortune 500 companies using their product because the number one thing on their mind is not really even the quality of the answer they get from the LLM, from AIP. It's making sure that that data is secure, it's confidential, it doesn't get leaked, especially if you're a hospital, Cleveland Clinic, right? You got to make sure you have very proprietary academic research, all that stuff that doesn't go away. That's part of your moat as a hospital. Like that's the part where ChatGPT, I don't think is going to be able to compete at that part of a level. OpenAI made the consumer product people wish Palantir made. 100% agree. OpenAI made the consumer product people wish Palantir made. Palantir is not a consumer product, right? Which is why it's, not at the level. But you look at OpenAI's valuation at $90 billion, and then you see how big this can get. They killed thousands of startups yesterday. I mean, because I'm in the startup space, I know thousands of different founders that essentially took GPT, put a wrapper on top of it, tied it with a bow, and presented it to consumers as like a new product. And people are like, oh my God, this is so revolutionary. I can like do all the, it's just GPT. It's just like with fancy UI and you added a little modifications. ChatGPT yesterday basically said, hey, on the new OpenAI store, like boom, you can access all of this information. You can build it yourself. You don't have to do coding. There's no like UI involved. You just, boom, you create it. It's done. It's ready to go. You can start selling it. A lot of startups yesterday have to start thinking about, how they're going to go to market and do what they have to do. Iceman JJ says, Amit, this is more of a bull case for Palantir. Companies are not going to hire people to be able to update and build for different app stores. I agree. I mean, if you're a company, you're not going to be building your company's proprietary enterprise data on ChatGPT's store. Like that's just not going to happen, right? So to me, what this is going to do is it's going to continue to further the use cases of more and more people that work at some of these enterprises interacting with these large language models. And if they go to your enterprise and, if I'm at Accenture and I'm using ChatGPT at home, and then I go to my workplace and there's no ChatGPT for the enterprise, there's no AIP, I'm going to go to my boss and be like, dude, we need AIP. We need chat. We need something because I cannot be this productive at home. And then when I come to the office and I use the company servers, I'm not allowed to use this stuff because of a quote unquote security risk. And, you guys are afraid of if I use ChatGPT, something bad happens. You need to implement something that allows me to use the company's data to be able to become more productive. This is all about productivity gains. This is all about how AI transforms productivity within the enterprise. And I think we're going to see a lot more revenue per employee in all these enterprises start going higher and higher and higher as AI in the enterprise becomes a lot more stronger. And so that's really, really going to matter long term. And this is important. Era says, without structured data, LLMs, it will hallucinate. Admit, why do you think this is a threat to Palantir? So I don't think it's a threat to Palantir. I think some people have been saying, well, if a company can just, build ChatGPT for the enterprise within minutes by using OpenAI's products as of yesterday, that could be a threat. My concern is twofold. Same with you, Araz. Number one, there's going to probably be hallucinations. That's why that K LLM is really important to understand. We'll talk about that later. Sham Sankar, explaining what using a multitude of LLMs does to be able to give the right answers. And number two, the confidentiality of the data is incredibly important, and you don't want to give it to ChatGPT, which is more of a consumer product than an enterprise product at scale. So Christian says, long Microsoft. Honestly, I mean, I'm not going to go long Microsoft because the valuation still is a little iffy for me, even though at 10 years, the valuation probably is not going to matter. But dude, Microsoft's up right now, 0.84%, up 1% yesterday. People are excited about Microsoft because OpenAI at 90 billion looks cheap. I mean, think about this. Palantir is at 40 billion. Okay. You could argue it's overvalued, not overvalued, whatever. Palantir's at 40 billion. They're doing $72 million in profit. I don't know how profitable OpenAI is yet, but I mean, OpenAI at 90 billion, it's almost like, I don't know what Apple's market cap was at 2008. I mean, we could check that out real quick. But when Apple launched the App Store, we all saw what it was going to be, or at least Apple investors in 2008 saw that every developer in the world will want to get people's attention on these devices because these devices are so revolutionary that we're going to make an app, which means Apple is going to get billions of apps in the App Store, and they're going to take a small little 30% ticket toll on the highway for your app. Think about that with OpenAI. The revolution that was the iPhone is the LLM. The large language model is the new revolution as per the iPhone, because we've never seen anything like large language models, just like we haven't seen anything like iPhones since 2008. And now they're going to take a small little toll booth. They're going to take a small little toll at the toll booth as you're publishing these GPT apps. And the question becomes, if they can get enough consumer adoption on it, they're going to win. Now, the problem is they don't have a hardware device, which I know OpenAI is also in the talks of trying to create. So if you're not using the LLM like on your phone or in some app, etc., it's maybe not going to be as widely accessible to people. But the fact that that app store exists is a really, really big deal. The thing is, this is great, but how will the average consumer interact with it? And I don't know. We will see. I mean, we will see. That's the question, right? How will, for those that are just joining, we're talking about OpenAI's developments as of yesterday. Big implications for Palantir, big implications for the tech market writ large. The average consumer is going to have to become good at downloading quote unquote different versions of GPTs. And then they're going to have to be interacting with it on a day-to-day basis. I don't know how the average consumer is going to do it. If I think about myself, quite frankly, unless I really care about something super important, I'm not going to be downloading GPTs like I'm downloading apps on the App Store. I mean, even think about your iPhone. How many of you download one app every week? Forget every day. It's probably not a lot of you, right? You probably check 5-6 apps a day max. And so the idea that you're going to start using a ton of GPTs, it's a cool thing. And there's a lot of people in the world, so a lot of people will use it. It's just, I don't know how big it's going to be, right? And so that's, I think, one thing that we have to think about. But overall, fantastic announcements. Microsoft's probably going to benefit on this a lot. This proves that OpenAI is positioning more as a consumer-facing and Palantir B2B. Yeah, OpenAI's enterprise product is still very early. Eventually, I think they're going to try to go after the enterprise. But quite frankly, why would you want to go after the enterprise if you have billions of people? They mentioned that ChatGPT now has 100 million weekly active users. People thought ChatGPT was dying, which as per their traffic sources, yes, it's definitely going down. But it's not like dying by any sense of the imagination. 100 million weekly active users is cool. So here's how we'll end this comment. And this is what I want to know people's comments. And then we'll talk about more macro. We'll talk about if a recession is coming. Where the hell is Google? Where the hell is Google? I mean, what OpenAI announced yesterday is basically giving power not to developers. It was a developer day, but they were giving power to average people. Everyone on the planet can make their own GPT. If you have a couple of Excel sheets of your own data, no matter who you are, what industry you're a dentist, you make dentist content on YouTube so you can get more leads to come to your clinical practice in Minnesota, you can create your own GPT within seconds. Like even creating an app store or creating an app on the iOS app store is not that easy. Like Apple has not made it that easy. You actually need like a technical developer to help you make it, etc. And then to push it, it takes like 3 months to get approved. It's a whole stupid process. This GPT thing is done in minutes. I mean, they made a demo in minutes. So why is Google not the platform? Why is Bard not the platform to make your individual bards? Even though that name sounds disgusting, like you'd rather, Google has their own bards, and that's just as good as ChatGPT. So, I mean, ChatGPT's API will be available on every website. That's another big thing. Meow says Google Bard is bad. They cannot even analyze their own videos from YouTube. No, Google Bard actually is bad. I mean, I asked how many customers this Palantir has. They said 2,000. I'm like, all right, bro. Like, with all the data you have, if you're telling me Palantir has 2,000 customers and not 453 that you can index from their Q3 report in seconds, I mean, I don't know what's going on at Bard, but I know they're making a lot of money off search ads. But where the hell is Google? I mean, because Google should be having this type of app store for people to build on Bard. And why is ChatGPT doing it? I don't know. It's actually a little scary. I don't know where Google is in this process. Maybe they're coming out with something, but you would imagine that they come out with something soon. So we'll see what happens with Google. Let's transition now to a little bit more macro. Then we have WeWork, Uber earnings. We got a lot to discuss. 17 minutes until the market open. There is a little bit more of a bear case for why the recession is coming. It's just going to be a little bit delayed. Let's take a look at what this analyst says, and then we'll analyze a company that, as a result of an impending recession, is now potentially going bankrupt.
With me at Post 9. Welcome back.
Good to see you, Scott.
That is the central question after that unbelievable week we just had. Does that mean our chances of a year-end rally have now improved?
I think they have. I think they're back on. And you look, over the last couple of weeks or couple of months, I should say, we had a lot to worry about. And specifically, we're worried about what the Fed is going to do about the upward move in rates across the curve. We're worried about the Treasury and what the borrowing estimates are going to be and just how much coupon issuance we're going to have. But we put a lot of those worries to rest last week. And when I come into this week, what I think the slate is now clear for is seasonality. And seasonality is the strongest in November. It's the strongest in December. And something like 75% of the time, stocks do rally in November, December. Now you say, well, what about the 30% that it doesn't happen? And what I'll say to that is, what is the catalyst today? And I think the catalyst today still is the economy that is not falling apart. And maybe there's a recession in the cards at some point in 2024, but it's not today.
All right, Marco Kolanovic, JP Morgan, right, puts a note out shortly before our show in which he says, quote, falling bond yields and dovish central bank meetings are being interpreted by equity markets as a positive in the near term. However, we believe that equities will soon revert back to an unattractive risk reward as the Fed is set to remain higher for longer. Valuations are rich. Earnings expectations remain too optimistic. Pricing power waning, profit margins at risk, and a slowdown in top line growth is set to continue.
So big thing here from JP Morgan's Marco Kolanovic is that the expectations for 2024, which is, I believe, 9% growth, still too high, even though Q3 was good. A lot of this stuff like profit margins, for example, are going to come down, pricing power, et cetera, which means like these valuations are still too tough.
Those are reasonably valid points. What's your response to that?
I think that is likely to be the story of 2024. I mean, I do actually, Scott, share now the concern that 2023 was a soft landing year and everything sort of worked out perfectly. But in 2024, if rates do remain at current levels, that I think Marco is right, it is going to be a lot harder for companies to, for example, to repay their debts, to pay the interest rate that's now 5.5%. It's going to be more difficult whether you have leverage loans, whether you have fixed rate debt that you need to refinance. And so as that plays out throughout 2024, that's likely to be the case. But what I want to do today is decouple the trading view versus what I want to position, how I want to position my portfolios for 2024. And so that's why today I still think, we bounce off from current levels still, given the seasonality, given the buybacks. But if we do get the bounce back, perhaps you use that to your advantage and you start positioning more conservatively for 24.
What that means is sell. So when she says, if we do get the bounce back, and this is street talk for, if you do get the bounce back, you use that as an opportunity to position more conservatively and prepare for 2024. That means sell your freaking stocks. That's basically what she's saying, right? And quite frankly, there are some stocks I'm not going to sell, but if we get a massive run up going into the end of the year, we still got about a month and a half left, I will definitely be looking to trim some of these positions because 2024, I just don't know what the hell is going on. And the reason for that is also there are more options versus long-term positions, right? Long-term is long-term. The stock is the stock. But some of these options, if they run up towards the end of 2024, you could let them keep going, especially because they're leaps, so they have time. But 2024, I have no idea what's going to happen. I try to analyze the market every day. I try to analyze what's going on in the market every day. And even I cannot reasonably say 2024 is going to be good. We've talked about a lot of the bull cases for 2024. We talked about inflation coming down, yields coming down, rates coming down. But on top of all that stuff is this underlying argument that the yield curves have inverted. Every time there is an inversion, there is a recession. And if interest rates do come down, interest rates are coming down because something is breaking in the economy. So the Fed is realizing, hey, we've got to, stimulate the economy a little bit more, which means there is some type of recession that's going on. The reason the Fed paused rates is because of what's going on with Israel and Hamas. I mean, that to me is the major reason. Inflation, top line CPI for the past 2 months was 3.7%, August and September. It's not like CPI is coming down that dramatically as per the top line. Core is coming down pretty well, but I think the Fed looked at what's going on in the Middle East and they were like, yeah, we're not going to raise rates right now because that could escalate. I mean, if you take it to the extreme, that could be a world war. I mean, I don't want to fear monger or anything like that, but that is not a good situation at all. And so the idea that you would raise rates at that time is kind of just stupid. And so we're going to see what ends up happening, but it's definitely going to be an interesting end of the year. And we'll see if some of these companies have momentum in them to keep going a little bit more higher. Let's get into earnings and talk about some of the stuff that happened yesterday and today morning. We got about 12 minutes until the market opens, and let's see what we've got on earnings. Let's talk about Hims, okay? This company, a lot of people are excited about. Hims is an interesting stock. They sell men's consumer products and girls or women's consumer products in regards to health. I think if you're like balding, they sell that type of stuff. If you have erectile dysfunction, they sell those types of pills. So Hims is that type of company. Revenue, they beat revenue by 2.9%. They beat their guide by 3.3%. They beat EBITDA by 3.8%, beat their guide by 6.5%. They missed on GAAP EPS profits by a penny, so they're still unprofitable, but it seems like they're coming very close to profitability. Revenue was $226 million. They are year-over-year growth on the revenue is 56%. They added 1.43 million subs, or they have 1.43 million subs in total. Year-over-year growth is 44%. And then their average order value is $99. That means when you go to the website, you get about $99 per customer, which is up 19% year over year. Look, it's not bad. I mean, if you're investing in a growth company that's unprofitable, that needs to show growth versus profits, I mean, Hims is one of those companies. The stock right now on Hims is up 5% in the pre-market. I don't have a position in this company. It's $6.62. It ran up to $9.28 back in August, and it went to a low of $4 back in November 2022. The actual high was $12 in May of 2023. So when we had that big rally, S&P was going at 450, 460. That's when Hims was at $12. So now it's at $6, basically down 50% from that time. Let me know in the chat if you own this stock. I do not. It's an interesting company. I don't really know what the moat is of Hims. The growth is cool. I don't know what the moat is. I know a lot of other companies sell the same types of products. I would say the moat has to be marketing, right? Like it can't be that their hair loss drugs are that much better than other people's hair loss drugs. That would be a hard sell for me. So I don't know. I mean, Hims as like a long-term investment, I really do not think there's that much exciting about it outside of the growth. But if the growth is, 56% year-over-year growth is hard to get. And at this valuation, what's the value? 1.3 billion. I would have to look in more into the numbers and think, is that even a fair valuation? Is that like, it's definitely not crazy, I would imagine. 211 million shares outstanding. That's the float. I mean, look, it's interesting. There's a lot of growth. There's definitely a lot of growth. But I agree with technical trader Wong. You can wait for a position on Hims. You can probably wait for that as well. So that was Hims. Let's go to Uber. This is a company I have not been bullish on ever. And after I went to Vegas and I had to pay $30 for like a 2-minute Uber, I really got bearish on them. So they beat bookings by 2.3%, missed revenue by 2.5%. That's why the stock is down 3% right now. They missed on revenue by 2%. Stock right now is down 2%. Stock's not down that dramatically, but nonetheless, that is why the stock is down. They beat EBITDA by 6.9%, beat GAAP EBITDA guide by 29%, and they beat their bookings estimate by 1.6%. Their revenue was $9.2 billion, which is up year over year 11%. So they're growing at 11% year over year. And I believe Uber is profitable again. Yes, Uber is profitable again. They were profitable for the first time last quarter at $325 million. Uber this month was profitable again. I'm just trying to pull up the exact profit number. And that's probably why, the street is not really taking them to a bad place, because if they're going to continue to be profitable, then that is a good thing for Uber. Now, the other thing that's really going on and good for Uber is that their Uber Eats business is continuing to grow pretty dramatically. Net income was $221 million. Okay, so their profit was down from last quarter. Last quarter, they put up $325 million. This quarter, they put up $221 million, but this includes a $96 million headwind pre-tax due to unrealized losses for Uber's equity investment. So they took a loss, which is why their profits are down quarter over quarter from last quarter. That's reasonable, but they are indeed profitable, which is important. Look, the beautiful thing about Uber is Uber Eats is growing, Uber Freight is growing, and then Uber in general, bookings obviously is up 2.3%, so that's growing. The problem with Uber, again, and this has been the problem my entire time thinking about Uber, is that $20, it was a steal during COVID, especially during COVID, right? Because people were ordering a lot of Ubers. The market cap is $98 billion. I mean, I don't know how you can justify that. I don't know how you can pay that as a shareholder. Unless you have a very long-term mentality, $98 billion you're paying per share of Uber for a company that's putting $200 million in profit. I mean, this is a company that's been around for almost 15 years, right? They've been public in 2019. So, and they went public in 2019 at this valuation. If you bought it in 2019, you're breaking even unless you DCA'd during COVID. So it's just not enough for me to get excited at all. I think a lot of people, there's just so many better opportunities out there in the market if you're thinking of Uber. I know all of us use Uber. All of us like Uber. We probably have all been in an Uber. But it's one of those things that the VCs got very rich off. Venture capitalists, Jason Calacanis, for goodness sakes, he put 25,000 into the company, made 115 million. So, if you invested early, you made some money, but buying it now at 98 billion is just a bit ridiculous. They also had some bad management changes. The founder stepped down. They put in Dara Khosrowshahi, who's a great CEO, awesome operator, but I don't know if I want to trust him as the guy to take Uber to become the next 4 or 5x, which would be a $500 billion company, which is already a lot, assuming they're at $100 billion right now. So we'll see. Erwin says, wait, I had a dream last night that Berkshire Hathaway issued notes with a 16% coupon. I thought when I saw your comment, I thought you were going to say Berkshire Hathaway put in their money in Uber and they're like betting on ride hailing as the future. That's hilarious. Amit, what are your thoughts on the Airbnb and the housing market around that? Do you see a bubble in the market? We have 6 minutes until the market opens, so let's pull up the charts. Housing market's very interesting. I do think that market prices are going to come down. If you remember, we sold 12% more homes month over month in September than we did in August. So more homes are selling, but the average price per home, I think, went to like 455 grand in America, which is down about, I think, like 15% year over year. So prices for homes are coming down, even if sales are going up. Eventually, I think most people cannot keep up with a 8% mortgage, which is still kind of where it tops at 8.1% for the 30-year. So I think Airbnb is in a tough situation as well because, and we've talked about this on Finance Junkies, Airbnb now at $118 down from $140. Airbnb is still part of the S&P 500. That's why they popped to $140 now at $118. A lot of people in 2022 became Airbnb millionaires, where they collateralized different properties on top of other properties and essentially started renting them out. So like you would buy a property and then you would collateralize that property, which means you would essentially use it as margin against another property. And they did this with like hundreds of properties and built these Airbnb empires. If you just type in Airbnb empire on TikTok, you'll find a ton of these people that were doing this stuff. And it's definitely not going to work out that well now. Because now people are not going to be able to pay those ridiculous prices. Those mortgages have gone up. And so there could be a potential collapse coming into the Airbnb marketplace, which is not going to be good for Airbnb because they're not going to make any revenue off those people staying in those houses anymore. So don't know what's going to happen, but that is a cause for concern. And that could be a potential headwind for housing market writ large. Tanner in the chat, he says, hey, buddy, good morning. Did you take a peek at Celsius pre-market earnings? I didn't. Let's take a look at that right now. Celsius, I know they authorized a 3-for-1 split, correct? Wow. $188. Look at that. Look at Celsius. I know someone in my comments yesterday was telling me about Celsius, up 6.75%. We got 4 minutes until the market open. Let me pull up their earnings. Let's take a look at Celsius earnings and see what they are doing. Let's pull this up right now. Celsius is one of those energy drinks that it's just growing and growing and growing because, you know, they know how to grow. I mean, they know what they're doing. It's like a Monster type of story in terms of that energy drink that also was growing pretty dramatically. And that's what, you know, a lot of people ended up making money off that as well. I'm looking at their earnings right now. They have they have to have a regular PR. They don't have giving me the 10K. I want to see a little bit more than that. So we'll pull up their earnings in a second. But Celsius is one of those companies that, you know, my bear case for Celsius was I didn't really understand the brand. Like Red Bull, the reason Red Bull grew is because there's a brand. Red Bull sponsors the X Games. Like it's like get Red Bull gives you wings, right? It's really exciting. Celsius grows really well, but I never understood the long-term brand of this company. This stock was at $4 in 2020. It's at 187 right now. Up 5.7% on the day. And I believe they're doing a 3-for-1 split. So it'll be like a $60 stock, $70 stock soon, if I'm not wrong on that. Market cap of 13 billion. I believe they are profitable. It was a $4 stock in 2020. I mean, this was probably one of the best investments we all could have made if we saw the vision of Celsius going into 2023. So, I mean, this is a company that did really well. We have someone here. I love Celsius drinks. Oh, Brad did a single post. Okay, let me go to his. Let me go to Brad. Shout out to Brad Freeman. I looked at his Uber and Hims report today. If you're not following him on Twitter, definitely recommend giving him a follow because he has a really great consolidated Twitter to show you earnings reports. Okay, let's look at Celsius earnings right here. 2 minutes until the market opens, and we'll see how the market responds to this. Beat revenue by 9%. Wow, that was the revenue estimate as well. Beat EBITDA guide by 6.1%. Beat GAAP GPM by 430 basis points. Beat GAAP EPS. Look at that. They beat it by 51 cents a share of profitability. The street expected 38 cents a share. Incredible growth. Total revenue, $384 million, which is 104% year-over-year growth. Oh my God. Oh my goodness. Quarter over quarter. Look at that. 36 million they brought, or sorry, 325 million they brought in Q2 2023, 384 right now. Q3 2020, that was 36 million. So the 3-year CAGR is 119%. That is absolutely incredible. Absolutely incredible for Celsius. Well, now we know why it's up. Not 6.1, 61%. Yeah, that's why the number is up. They beat EBITDA estimate by 61%, not 6.1%. This is pretty incredible. I don't, does anyone in the chat have a position in Celsius? The consumer is strong. Yep, that's the takeaway from that. The consumer can afford the $3 drink that Celsius serves up every day. It seems like that's the argument for Celsius. Wow. Absolutely incredible. So Celsius had good earnings. Uber had earnings. So we're seeing different, stories from the consumer there. Palantir had great earnings. Verizon had good earnings. Hims had great earnings. We're seeing these consumer companies continue to have good earnings. The question simply becomes, is the market by the end of the year going to respect those earnings enough to continue to give us an end of year rally? November 7th, 2023, 9:30 a.m. Another day, another dollar. It is time to open up the stock market, ladies and gentlemen. 749 people. Thank you for being here. The stock market is once again open. Wake your ass up. Here we go. Let's see what's going on. Celsius opens up at $176. Oh, so that's a pretty massive red candle. Look at that. It was at $185 in the pre-market. Wow. That's interesting. This is why the stock market's interesting. It was $185 in the pre-market. It was up 5%. Now it's at $179. So now it's at $180. You saw it went down. As soon as the market opened, people took some profits and immediately sold it off, which gives you a little bit of signal of how the market's thinking of it. All right, so we'll get back to Celsius, but Celsius right now up 3% of the day of good earnings, going right back to that 185 level now at 183.44. Airbnb 119.23, up 0.89%. NASDAQ 13,560, up 43 points to start the day. This bad boy was at 12,500 just 4 days ago. So right now, NASDAQ 13,565. Again, you can see that nice V curve right there. It was at 12,543 on October 30th. Right now, November 7th, 13,556. Palantir. Jim Cramer yesterday, for those that are just tuning in, said, I am a Mr. Palantir. For those that are concerned, he says, I am on the Palantir train. Palantir saying, you know what, Jim Cramer, if you're on the train, you can hop on this train because this train is going to ka-ching, 1.13%. Palantir not slowing down, up 1879, even if Jim Cramer is bullish on Palantir. TFC, regional bank that I'm in, down 0.94% today, $30.45. Enphase 77.49, down from $80 from yesterday. KRE, regional banking index, down 42.59. Netflix, again, 9 million net new subscribers. Netflix is going to do well if you do that. Netflix is up right now, and they deserve to be at $435. A nice premium on Netflix. They also bought back $2.5 billion of shares. If you buy back shares and you grow subscribers, the street is going to reward you. If Bill Ackman had just held his Netflix, he would be up. But he transitioned to Google, which for some reason is letting ChatGPT own the entire GPT marketplace right now. So we'll see what ends up going up with Google. But Netflix at $435, Instacart $27.45, still below IPO price. Square, Block, $50. This bad boy was at $39. If you picked up Square under $40, congratulations, you did really well. I'm not the most bullish on Square. I don't really like the business as much as a lot of other people do. I definitely don't like the share-based compensation. I don't like Jack Dorsey being the CEO. And that's nothing against Jack Dorsey because I'm a founder. I have a lot of respect for founders. But what Elon's doing with Twitter and what Jack refused to do for Twitter for 10 years is just like, it leads me to believe, how can you trust someone who basically does nothing for 10 years? So I don't know, but Square, it benefits off Bitcoin. Bitcoin has done really well. So Square, their earnings were really good. Cash App, obviously one of the best consumer finance products on the planet. $50 is up 1.5%. So congrats to Square shareholders. Tesla, $220. Tesla's Cybertruck Day is coming up later this month. I believe November 30th. They're doing the big reveal of Cybertruck. They're delivering a couple of those bad boys. So it'll be fun to see Cybertruck come out. PayPal, of course, is down $54.39. Why wouldn't it be down? But PayPal, $54.39. Shopify, $67. They crushed earnings as well. Nvidia, $458, basically the same as yesterday, unchanged. The video again was below 400 a couple days ago, now at 457. The market's excited for Nvidia earnings on November 21st. So we'll see what Nvidia comes up with. SoFi. Let's talk a little bit about SoFi. SoFi's at 745. The sentiment on SoFi is shifting a little bit. The sentiment on SoFi is shifting. If anyone is on the Fin Twitter world, if you're on Twitter, SoFi is getting some hate right now. SoFi is not getting a lot of love. And that's primarily because I think the market is being concerned, or is showing concerns, that if a recession is going to come, the people that have loans with SoFi, or the people that traditionally deposit into SoFi, even though the FICO scores for them are going up and it's seeming like it's a really sticky user base that's not going to default, there's going to be some issues with SoFi. There's a lot of chatter on the interwebs that SoFi's in a tough position right now. And, the stock's going to $5-6. Now, do I think that's happening? Probably not. But I do think SoFi's, if a triple beat could not get the market excited, then the general sentiment around SoFi is going to be in a tough situation for now. Granted, I think, the biggest issue with SoFi is that they're not gap profitable. People are like, how can you have a $7 billion market cap and you're losing $300 million? Well, it's because you're growing 717,000 members a quarter. That's going to be 800, 900,000 members a quarter within the next 4 or 5 quarters. It's going to be like clockwork. They're going to be adding 1 million people by 2025 every single quarter. That's 4 million people a year that are going to be integrating into SoFi and not giving their money to JP Morgan or Bank of America. So I am still long SoFi, bullish SoFi, but right now it's in a little tough situation sentiment-wise. People are not the most excited about the company. McDonald's 269, S&P 500 434, down 0.19%. Robinhood 962. Robinhood has earnings today. I will not be able to stream it live, unfortunately, but I will be tweeting about it live. Twitter's in the description. Make sure you follow me on Twitter. I'll be discussing everything about Robinhood. They're likely not going to be gap profitable because they had a $100 million regulatory fine. They were supposed to be gap profitable by about 25, 50 million bucks. That's not going to happen. I think the market valuation is so depressed at this point. I don't think the street is going to really kill Robinhood. So, we'll see what ends up going up with Robinhood, but it's not in the worst situation. Blake says, what's a good price for SoFi? 5 or 6? 5 to 6 is good for SoFi. That's when I got my shares. So, we'll see, if it gets back to that level. I think there's too many buyers. I think there's too many people that like SoFi. I think it's too much of a retail cult for it to get back to that level. It could, but I think a lot of people would be buying that dip. We saw SoFi touch 690, I think 2 weeks ago. So if it gets back there, unless, the market really turns bearish, all the price targets for SoFi are still 14, 15 bucks, 11 bucks, 12 bucks. The price, there's like a couple of people that have a $3 price target on it, but most of the price targets are very bullish SoFi. The market's just, not reciprocating that value yet. Google 139. Google's down today. I think Google's down. I know it's barely down, but I think it's down because for those that are just joining, if you go back to the 10-minute or 14-minute part of the market open, we talked about OpenAI extensively for 15 minutes. Microsoft is going to benefit from OpenAI. OpenAI unveiled their ChatGPT marketplace yesterday. Microsoft owns 51% of OpenAI. That ChatGPT marketplace is absolutely insane in terms of the potential of what it can be. ChatGPT has 100 million weekly active users. Google obviously gets 88 billion monthly active visits to their website. So Google is still far and above what Bing or ChatGPT could ever be, at least for the foreseeable future. But I think it's down today because Google is not introducing the barred marketplace. ChatGPT is. All the eyes are on ChatGPT. And the beautiful thing about ChatGPT and what they did yesterday, OpenAI, is they made regular people that aren't developers feel like developers. That was the beauty of what I saw yesterday. Regular people could be creating products, even if you're not a developer, which is why I think people were excited. Palantir, 1867, up 0.67% on the day, down a little bit from 1880. ARK Innovation. ARK, people were asking me, is ARK break even on their Palantir shares? Dude, ARK is more than break even on their Palantir shares. ARK is making money on their Palantir shares. ARK is making ARK's average is like 12 bucks, I think. They bought a lot at 9, they bought a lot at 10, and they bought a lot at 14. So I would imagine their average is close to 12 bucks. Stocks at 18. Let me actually I think I have a website that tells me how many exact shares they have. They have a ton of Palantir. Now, obviously, they liquidated and took a $400 million loss in February of 2022 when they sold the stock at 12 bucks, which, the stock went to 6. So you could say it's a good sell. But the problem is then they bought Roku. They also sold Roku yesterday. I think they took some of their gains on Roku. Roku went up 20%. They were like, let's get out of some of this Roku. But nonetheless, they are up on Palantir, and they're up on Palantir pretty well. So I think ARK is a very happy shareholder of Palantir right now. And we'll see if they continue to do well. So I'm looking at this website right now. ARK Innovation has 1.79% of their portfolio in Palantir. They have 125 million in Palantir. 125 million, which is, let me just share this with you guys. 125 million, which is not crazy at all. Obviously, some of the other stocks are still taking a lot. HIMS is 16% up. Whoa. Let me look at that real quick. So the market liked HIMS. Look at that, $7.30. We talked about HIMS a little bit below. If you go scroll back down to, what timestamp was that? That was 33 minutes and 46 seconds. If you go to that, we talked about HIMS. They were up 5% when we talked about it. Now up 16%. So the market obviously liked the growth. This is what's going on in ARK Innovations ETF right now. Roku is that number one spot. They have $659 million in Roku. Coinbase is second. Tesla's actually third right now, which is incredible. Tesla's third. And then you got Palantir, Robinhood's number 16, Palantir's number 20, 125 million bucks. So, they're doing well on Palantir, and they're seeing a lot of revenue appreciation from Palantir as well. Celsius down, Datadog. Yeah, let's look at a little bit more of these stocks. So Celsius, we saw massive beat. They are down, and the reason they're down and they took away their pre-earnings beat, they topped at 188, is because the market cap's at 13 billion. Revenue is at 300 million, right? trailing 12 months, I think it's at like what, 1.2 billion, something like that. So, I mean, I don't know if I mean, maybe it's a little expensive. Price to sales is what, 15 or something. Price to sales is 14 on an energy drink. Price to sales of 14 on a software company is already asking for a lot. Price to sales of 14 on an energy drink is a little tough. But again, the growth is there. So the question simply becomes, can they keep that growth up? And when the stock goes from $4 to $174, it's going to be hard to keep that growth up. But we'll have to dive deeper into HIMS and see into Celsius and see what's going on. HIMS, let's take a look at that. HIMS is at 724, up 15%. And then Datadog reported today as well. This is another software company that's really important in the ecosystem. Celsius lost all of their gains. Yep, they lost all of their gains. Datadog, well, look at that, up 25%. That's not bad either. Let me pull up a one-pager on Datadog by my guy, Andre. He posted this on Twitter. And then we got to talk about some more SoFi insider selling, which unfortunately happened on the worst day you could be selling SoFi. I mean, when the sentiment is at the worst, you got people selling. Here's the one-pager on Datadog. Let's take a look at what's causing their beat today. Datadog, I don't really know if it's a competitor to Palantir. Like, it's a competitor. It's in the ecosystem. Snow is up 7 points. Did Snow have earnings today? Snowflake didn't have earnings today. There's no way. Well, we'll check on that in a second. Maybe they did. Revenue, 547 million versus 436 million in 2022. So revenue is obviously very green. Palantir brought in 558 million. So kind of close to Palantir. Net income, they brought in 22 million. Now Palantir brought in 72 million. So their net income is 50 million lower than Palantir. But the growth is there. So, I mean, that's kind of why we're seeing a little bit of green. They spent a little bit more on sales and marketing, a little bit more on general administrative. Total expenses went up by about 80 million. But revenue, 547 versus 436. Yeah. I mean, if you're going to do more than $100 million of revenue year over year, you're going to get a nice pop at 25%. What is the market cap for Datadog? Let's take a look at that as well. I think last time I looked at Datadog, the one thing I hated about them is they had a crap ton of debt. And that's what I didn't like about Datadog. They had like 2 billion in debt or something, and I really didn't like that. Market cap's at 32 billion. Okay, so let's think about this. Market cap's at 32 billion. Palantir was exactly at 32 billion before they spiked up to 40 billion off the 25% run on earnings. Datadog is at 32 billion and they're up 25%. So that means they were 25% below this 32 billion before they had this run up to 99 bucks. It's interesting. I mean, I am not an expert on what Datadog does. If you had to ask me honest, I probably couldn't tell you what they really do. They obviously work with data, and I'm assuming they integrate data in some way. I don't know if it's like a Foundry competitor. I don't know what they're doing with AIP. Cloud monitoring as a service. I'm looking at their website right now. Modern monitoring and security. See inside any stack, any app, at scale, anywhere. I don't know what the fuck that means, but there's a dog on the logo, so it's kind of cute. Like, look, they couldn't even get the website, bro. They had to buy datadoghq.com. Then what the hell is datadog.com? What am I about to go to? It's going to be oh no, they have both. Oh, they have both. Okay. I was just like, why did they have HQ in the domain? Like, where are we going? Datadog is for monitoring cloud storage. Okay. I guess that, I don't know what that means, but obviously I can deduce what that means, but it seems a little bit more different than Palantir. Palantir at 1865. Nonetheless, congrats to Datadog shareholders. I don't own the stock, but you're up 25%. We're seeing more cloud software companies go up, and I think that's why Snowflake is up. They definitely didn't have earnings because I would know about that. Snowflake's up 8%. Snowflake, $51 billion in market cap. They're growing at 37% year over year, which is more than Palantir, 17%. So you could argue they're justified for the premium. But remember, this bad boy IPO'd at $250 back in 2021. And Warren Buffett made $800 million off the IPO, for goodness sake. So, I mean, like, this was a Wall Street beloved company that always felt a little bit icky to retail investors, at least to me, because you were buying it at a very high premium. And you were, what were you really getting for buying it at that high of a premium? I mean, at that point, it was what, $100 billion market cap it was IPOing at? It's just insane, right? It's not even the same ballpark as Palantir. Okay. So it's another software company that's making money, that's doing well. It's good for the general SaaS environment to see a company like that go up 25%. That's why Snowflake is up. But as per Jay Schwash, it's not really a competitor to Palantir. I trust Jay Schwash because he works at Confluent. So he knows a lot about this ecosystem. Snow earnings, November 29th. Datadog is just a tool. Yeah, I wouldn't imagine it being an entire platform, but it's worth $32 billion. Think about it. Datadog being just a tool It's 32 billion. Palantir was worth 32 billion a week ago, right? Right before the earnings. And Palantir is an entire platform, we would argue. So Datadog is simply just a dog handling your data. Everyone type L in the chat for Bay Ray. And Bay Ray, the reason you deserve that L is because that's a joke I would have made on the market open, but I think I've become more sophisticated in my jokes. That joke was so god awful that you deserve to publicly get an L. And you know why I don't feel bad about this, Bay Ray? Because you make fun of me on Twitter every single day over my jokes that are like 4,000% better than that nonsense you just typed in. That Datadog is simply a dog handling your... There's not even a punchline to that joke. So I think, you know, the market open, the 727 people, we're a really good community here. We need to officially give you a massive L on that joke. And you'll remember this, L, the next time you make a joke. You will remember this. Next time you want to shit on my jokes, you will remember that a dog handling your data, which doesn't even have a punchline, is not a good joke. I'm sorry. L's in the chat. We got L's in the chat. Garcia's looking out for you. Said W for the homie. Garcia, you're being too nice. You're being way too nice. What did Ray Bay say? He said a Datadog is a dog handling your data. Like, dude, if I made that joke, I would end the stream. I would be like, you know what? I'm done for the day. The 700 people don't deserve to be here to listen to that. Not to that joke. That one's, I got to be better than that. I'm sorry, Bay Ray. Got to be better than that. Okay, SoFi, insider selling. So this is one of the things we saw yesterday that was not good in the context of SoFi. And it really messed up a lot of things. So here we go on SoFi. We got Chad Borton. Of course, he's a Chad that's selling. Chad Borton decided to sell a bunch of shares yesterday. So let me pull this up so you can see big screen. Chad Borton, president of the SoFi Bank, sold 152,000 shares worth $759. He sold at $8 a share, $7.99. He only has 157,000 shares left. So he sold half of his shares. That is not good news. That is not good news. 150,000 shares is not, I mean, 50% of your shares down is just like, that's just not nice. And then Aaron Webster, the chief risk officer, sold 215,000 shares worth 1.74 million. He has 476,000 shares left. So he sold about 33% of his shares. Now look, insider selling, I don't want to make the biggest deal out of because Palantir had insider selling. Like every company is insider selling, right? You can't do anything about it. Insiders, they have to take, you know, they've been in the company for a long time. They got to sell. They got to go buy their second mansion or whatever, right? Like they got to do what they got to do. But to sell for two C-suite execs, president of the bank and then chief risk officer, to sell 1/3 and 1/2 of their shares, I mean, to say you're not concerned, it would be a little tough, right? Like that's a little tough. I'm still holding on to my freaking SoFi, man. I'm like, I'm not gonna let it go that easily, but I don't like seeing that selling at $8. I think these people might have the same concern that the market is feeling, which is, wait a second, you know, if a recession's coming, is SoFi well prepared to handle that environment? And I think that's what the general market is feeling right now. And the risk is, will a recession happen or not in 2024? I think no one knows the answer to that question. But that is some of the concern that I think the market's having, which is why we're seeing SoFi having some of those shares. 1/2 is sus. It is definitely sus. It's not, sus stands for suspicious. It's not good, bro. Like imagine Karp sold half of his shares right now at $15. You'd be thinking, oh, maybe Karp thinks $15 is really rich valuation. So I don't know. That's a tough situation to be able to see. Let's get an update from Mohammed El Iran. Let's get a little macro update. This is one of the people I actually trust analyzing the macro. Let's see what he has to say about the Fed, what position we are in, and why maybe fintech is declining right now in a potential upcoming recession. Let's see what he has to say.
Next guest says the four most important central banks effectively called a timeout on policy action over the last 2 weeks. He says they should use that strategy wisely. I want to bring in Mohammed El Arian. He is the chief economic advisor at Allianz and president of Queen's College at Cambridge University. Mohammed, what do you mean by using that strategy wisely?
Good morning, Becky. You know, in sports, there are different types of timeouts. There's a timeout that's forced on you. There's a timeout that you take simply to decide the next play. But then there's a timeout which is more strategic. And I think what's critical is for the Fed, the ECB, and the Bank of England to take a much longer view as to where they are on their rate cycle, recognize that they're done.
Remember, the Bank of England raised rates by 25 basis points last week as well.
They've done enough and sit back and worry about other more strategic issues, then simply react to the latest set of data. We saw it again yesterday, Becky. We had even more Fed speak reacting to the latest move in the bond market, the result of which we saw yields go up 8 basis points, come down 8 basis points. They should, to quote Hamilton, talk less and smile more.
So what I wanted to play there from Mohammed Al-Iran is basically saying there is a lot of volatility in the bond market. Again, the 10-year bond right now coming in at 4.6%. It was at 4.9 about a week ago, and it was at 4.558 a couple of days ago. That volatility we're seeing in the bond market is requiring a ton of different people is requiring a ton of different. It's allowing people to see a ton of different push and pulls that the market is having. Jay Powell doesn't want to see bond yields go down. He wants to see unemployment tick up, which is what he saw on Monday when the jobs report came out, Friday last week when the jobs report came out, which made him very excited. And he doesn't want to see bond yields go down. Well, if unemployment is going up and bond yields are going down, that's the push and pull that's going on in the macro right now, which is that you're seeing some good news, which is technically bad news because you're having unemployment, but it's good news because that means less inflation, which is unemployment taking up to 3.9% from 3.8. But you're seeing bad news, which is people keep buying bonds, which means that yield comes down, which means more money is probably going to go into the stock market versus bonds because people don't want to put their money into 4.2 or 4.3%. They want to take a little bit more of risk. And I think that push and pull is a really tough situation for the market to be in right now, which is why we're seeing the S&P kind of stagnant as well and not really knowing exactly where the market is ultimately going to go. Let's transition now to another piece of news, a headline that I wanted to talk about as well. This just goes to show that the market's in a really weird situation. The Chinese shopping app Shein is reportedly seeking a $90 billion valuation in their IPO. Now, what does this have to do with what we just talked about, interest rates? Well, a month ago, we saw Instacart and Arm go public. And the reason they went public is because the assumption was, which is basically what Mohammed was talking about in that last clip, that the Fed is done raising rates. And if we're done raising rates, then that means companies have the ability to ask the market for liquidity, which means they can go public. As we can see, those IPOs didn't turn out to be that good. Arm is still up, Instacart's down. But now, if you've got the Fed pausing rates, you've got a company like Shein, which I'm sure some people have used in the past. I ordered a couple of shirts from them like a year ago. The shirts were really bad quality, so I didn't order them again. To want to say, hey, what if we go public? Price tag is up from the $64 billion valuation it was giving in a funding round this year. The online fashion upstart has disrupted an industry that has seen the likes of Zara and H&M attained a higher valuation of $100 billion in April 2022. So it's still lower than the $100 billion valuation it got in April of 2022. Now, a couple of points of analysis here that are really interesting to think about. Number one, this is a Chinese company. So a Chinese company going up for Chinese company going public is interesting because we're seeing a lot of pushback against things like TikTok, et cetera, in terms of Chinese companies, given all the stuff we're seeing going on in Israel. And, we don't want to have bad influences in the United States. So that's one thing to take into account. The other thing about Shein is that, remember that joke I made on the Market Open? The joke that was way better than whatever the heck Bay Ray said 20 minutes ago about sweatshops and sweatshirts. And I was like, well, if I'm going to get a sweatshirt, if the people have to sweat for it, blah, blah, blah. Shein is the definition of a sweatshop. It's a $90 billion sweatshop. I mean, the prices they're putting at for some of these clothes, the prices are like $3 a shirt. You can't charge $3 a shirt unless you are literally paying people cents. Snowflake up 11% on the day. Goodness gracious, Snowflake doing amazing. You're paying people just absolute pennies to be able to make these products, or you're taking massive losses because you're subsidizing it in other ways. So yeah, Shein is, Shein is one of those companies I would never buy their IPO because no matter how good the growth is, no matter how many consumers they have the attention over, the stuff they're doing to be able to create the quality of the products, I just wouldn't believe in the quality of products. Even though I know a lot of women like Shein and, they find good dresses and stuff like that. I don't think it would be an IPO I would buy. Also, $90 billion in this market, it's one of those things you have to look at as an investor. You're seeing interest rates go down and they're seeing companies say, hey, well, let's go public for $90 billion. It's like, wait a second, $90 billion is a lot of money. That's not a joke. And so that would be one of the things I would be a little bit more concerned about. Datadog up 27% on the day. Hims is up 16%. Celsius look at that. Celsius, incredible day. Celsius went right down to 175 after topping from 188. Now it's up 3% again at 182. Microsoft is up. Airbnb is up. The NASDAQ is up. Palantir right back up to 1880. Palantir wants to be in that $18.80, $19 range, up 1.56% on the day as well. Kelly, who is a woman, is laughing at $90 billion for Shein. So maybe that gives us some context in terms of her perspective as a woman investor, thinking, hey, maybe that's a little pricey as well. And so we'll see, how the valuation ends up turning out. Midwest says, okay, guys, wish me luck. My first marriage counseling session, it will be 3 against me because it's a husband-wife counselor team, and my wife also happens to be a counselor, so 3 against me. Midwest, thank you for tuning into the stream for the hour that you were here. Enjoy the marriage counseling session. My best advice, I've never been in one of those, but I would just be like, listen, because if your wife wants you to go to a marriage counseling session, obviously she thinks that you're not listening enough, and you may have the same concern about her. So if I was going to turn on therapist GPT for a minute today, I would say just listen. And honestly, bro, just shut the fuck up. Like if you just shut the fuck up, maybe, and just listen, and maybe you won't have too much damage. And then the next session you could speak up a little bit more. Maybe that's my advice for the set. That's my unsolicited advice to you for the session. So have a good one, bro. I mean, couples go through that all the time. You always got to go through talking things out, because there's always misunderstandings and miscommunication sometimes. So good luck, man. Hope it goes well. And honestly, just listen, and maybe it'll get a lot better if you just be quiet a little bit more and listen to what they have to say. Palantir, 1888, up 1.863%. Netflix at 432. It's coming down a little bit. PayPal, 54. Tesla, 217. Tesla down from 220. Again, that Cybertruck is going to be announced a little bit later. Sofi, 739. The pain is not stopping for Sofi, down 1.47%. Robinhood is up 964. So Robinhood's a little bit more green. Market's excited about Robinhood earnings today. They probably won't be excited after we get results for Robinhood. Google at 131. Amazon, look at that. Wow. When did Amazon hit 140? Amazon, that got Lena Khan was, bending Amazon over on this FTC lawsuit, is at 123. Now Amazon's at 141. Absolutely incredible for Amazon. Not bad at all. Not bad at all. For those that have Amazon, I hope you're enjoying some of those gains, and I hope you loaded up a little bit more at 115, 116 when it was out there. Not bad at Amazon at all. Crossroads says, Amit has good advice. I've been there a long time ago. Yeah, sometimes you just got to listen. Sometimes you got to just listen. Midwest says, I'll STF you. Because you'll be able to talk eventually. You'll be able to voice your concerns, but a lot of it is just like being quiet in the beginning, and then eventually you're getting your thoughts out there. So not bad, man. I wish you the best on that. Garcia says, I went to counseling with my wife. It helped a lot. Yeah, it's a normal thing. Counseling seems pretty normal for couples. Amazon at 141. Palantir look at that. Oh, look at that. 2 cents away. 2 cents away from $19 on Palantir. 1898. Blake says the reason you're going to counseling is because you're talking too much about Palantir. Look, that might be the reason. That's probably why I would have to go to counseling with my girlfriend one day. Look at that. 1899. I mean, look, if Palantir is trying to break $19, I'd be paying more attention to that than the wife. I know, and she might be upset about that, but that's amazing. 19. There we go. $19 for Palantir. You know why it's up today as well? Because Datadog crushed earnings, up 28%. Snowflake is up 12% as a derivative of Datadog being up 28%. And then Palantir is up another 2.5% after being up 30% last week because of, I would imagine, Datadog earnings. Palantir, look at that. Just beautiful. Absolutely beautiful. $19 on Palantir. I mean, man, if you have a $7, $8 average, you're doing well. You are doing really, really well on Palantir. It's up because of my Datadog joke. Yeah, that if you can sleep well at night with that, Bay Ray, that's the reason. Maybe make more crappy jokes like that, and we'll crap on you in the live stream, and then stocks will keep going up. So we'll see that. Huge resistance at 19 previously. Yeah, and the major resistance was at 1840. 1840 was bad for Palantir. I mean, like that one was tough. We spent 3 weeks we couldn't get above. We like literally stopped at 1839 every time. So now we're at 19. It's not bad. Not bad at all. Software is having a good day. Now, look, if you ask me, hey, Amit, do you think you should buy at 19? The answer is no. I would not buy this stock at $19 because it's up 32% in the past week. Let me get the exact number on that. So buying a stock up 32% in 1 week, 28%, sorry, in the past week, in the past month, up 16%. It's a lot. It's a lot, so you want to wait a little bit. If you're super long-term and you don't care, that's fine. But pricing does matter. Valuation does matter. Timing does matter. And you don't buy a stock when it's up 30%. I mean, that's like buying Tesla at 290. Like you give it a little bit of time. Things can come back down. Things will come back down. The market ends up being red just as much as the market ends up being green. Sell puts at your price. That's also a great idea. Get some premium. The price you want Palantir at, whether it's 15, 16, sell cash secured put. Get some premium on it. Today, the premiums are not going to be that good because it's a green day. On a red day, the premiums will be better. But Let's actually see it right now. Let me go to my Robinhood and see what the premium is. So if I want to buy some Palantir, I have a bunch of cash secured puts that expire on November 10th. I am definitely in the money on those, so I should be fine on that. Let's go to Palantir. If I wanted to get a $16 price and I wanted to buy it, let's say December 1st, 16 bucks. Let me sell that put. I would be getting, it's not too bad. You're getting 15 cents a share. You're getting 15 cents in premium. If you were to do 17.5, you would get 41 cents. And if you want to be really risky and do 18.5, you'll get 74 cents. 18.5 is a little bit too much. I think 17 is kind of reasonable at 29 cents. 16 is way more reasonable. And 15 is the best, but 15, you're only getting 8 cents a share. So not too much. So yeah, I mean, on a day like this, cash secured puts could happen, but on a red day, you'll probably get a way better premium than on a green day right now. 19 Dolores, ladies and gentlemen, 19 bucks. I'm happy Kathy is green in Palantir. I agree. Kathy being green is really good. That's why we're seeing Kathy not buy either, because she's super green. So she's not going to be buying Palantir. She sold. Let me actually show you what Kathy bought yesterday, and then we'll do the word of the day, and then we'll end it off today, because Kathy bought some really interesting stuff yesterday, and she sold some interesting stuff as well. So here's what Kathy did yesterday on November 6th. Palantir end of year price, I have no clue, man. It really depends on macro. We could be at 19, we could be at 14. I have no clue. We're gonna have to see how the macro ends up turning out. So she bought a crap ton of Square, 70,000 shares of Square. Okay. She bought Ginkgo, the company I've been covering for a long time, no position, but she bought 386,000 shares of Ginkgo. At this point, I think she has close to 150 million shares of this company. She sold 171,000 of Roku. Roku's up 100% year to date, so she took some profits on Roku. And then outside of that, she also did some more buying. She bought Twilio, 25,000. She bought more Square shares of Square, 26,000. She bought Unity, 40. Where is Unity? We haven't talked about Unity in a bit. By the way, HIM's up 13% now. Unity, 26 bucks. So Unity is kind of at the level it was right before Apple announced the Vision Pro trust. She sold 139,000 shares of the Bitcoin investment trust, GBTC. That's probably because Bitcoin has gone from 27,000 to 40 to 35,000. She bought more Ginkgo, 86,000, and I think that was it for her. No, she did some other. She bought more Block, 16,000. She sold some DraftKings, bought some Toast. DraftKings actually done well this year, and she bought some more Twilio. So that's what ARK did yesterday. Not really engaging in Palantir anymore because it's up really well. So nothing too bad on Palantir. Also, let me end it off by sharing two more things about Palantir that you guys might not have seen if you didn't watch the video that I put out yesterday on Palantir Daily. Let me share two quick things from the 10K that you guys might not have seen. So these two things are, I think, important for all investors to know about. Okay, so let me pull this up real quick. This is from the 10K that came out yesterday on Palantir. Okay, so as per their 10K, they have $987 million of remaining performance obligations. For those that don't know what RPOs are, this is basically how much money left the company has already required in terms of revenue, but they can't recognize that revenue yet. So in the next year on their 10K, Palantir is going to recognize 57% of that $987 million, basically $1 billion. So $563 million over the next 12 months. So basically over the next 12 months, we have already achieved $563 million of revenue. So if we're going to do 2.5 billion, you can imagine we have 2 billion left to do because we acquired the 563 million already. And over the next 2 years after that, they're going to recognize 35% of that revenue. So over the next 13 to 36 months after the next 12 months, they're going to recognize $345 million of that 987 million. Why does this matter to shareholders? This matters because when Palantir reports 558 million in a quarter, it's not that they literally got 558 million in 90 days. It means they're recognizing revenue that they may have gotten a year ago or 2 years ago today because they fulfill those services. So the higher the RPO, the more long-term contracts Palantir is securing. So for example, if we get the NHS deal, which is $600 million, that 600 million is going to be added to this 987 million of RPO, which means we're not going to recognize that RPO like immediately tomorrow. We're going to, recognize it over time. And I think the company has a lot of flexibility over how they want to recognize their remaining performance obligations, which means, $1 billion in RPOs, then more that the higher that number gets, the more money we have to recognize, which is going to be good for Palantir writ large, which is awesome, right? Which is absolutely awesome. And then here's another one that's a really big thing for Palantir shareholders to understand. As per their last 10K, they entered into an amended agreement with one of their third-party cloud hosting providers. I believe it's Google, just because Palantir and GCP have a good relationship. It could be Amazon, it could be Azure. I'm pretty sure it's Google, but I could be wrong about that. For the next 10 years, Palantir is going to spend at $1.95 billion. So till September 30th, 2023, they're giving basically $2 billion to Google GCP. Now, why does this matter? The increased demand of their products is going to require more compute. Palantir doesn't sell cloud. They sell an abstraction layer above cloud, which is Foundry, AIP, etc. And clients pay as they go. So Palantir is not literally spending $2 billion out of pocket for this. Their clients are also helping them spend this money on cloud, because a portion of the money that clients spend on the pay as you go is going to be allocated towards the cloud computing costs. But the point is, Palantir has to provide cloud computing to their clients, and they're not going to provide it from their cloud because they don't have a cloud. They're providing the data analytics platform. So they're providing it from Google, GCP, Amazon, or Microsoft, which means they have more demand. And the reason for this is because if you look at the previous 10K from Q2, in December 2019, they had a $1.49 billion contract over 6 years. They were 4 years into that contract, so they had to re-up that contract. Now they're doing $1.95 billion over 10 years, so they got a better deal, and they're going to be spending about $154 million over the next year on just cloud computing up until 2024. $154 million until September 30th, 2024. So the amended agreement of what they're doing in regards to cloud computing is really good for Palantir, because that means they're getting a shit ton of demand, and they're like, look, instead of spending $1.59 billion, we're going to spend $1.95 billion. We're going to spend another $500 million with you because we need to supply $500 million more worth of demand. And then obviously Palantir is able to make more off that $500 million, which you would argue they're able to make a lot more because their adjusted gross margins are 81%. Then Palantir is going to be able to bring in a lot more money, as their adjusted operating income margins also have gone up to 29%, up from 17% a year ago. So really good stuff for Palantir. If you look at that 10K, I'll be diving more into that 10K and trying to get more information on what's going on with Palantir. Where are we at on the stock price? 1905. Not bad at all. 1905 for Palantir. All right, let's end it off with the word of the day, and then we will be done for today. Thank you all for joining for another Market Open. We debuted the new shirt on today's Market Open, so I hope you guys like the shirt. The word is semaphore.
Semaphore.
A system of signaling, especially a system by which a special flag is held in each hand in various positions on the arms, indicates specific letters, numbers, etc. Okay, let's see this in a sentence. With a well-coordinated semaphore display, the scout effectively transmitted vital information to the rest of the team. Using a semaphore, the sailor signaled the approach ship by holding her arms in precise positions, forming letters and numbers. Okay, so semaphore is basically a way to signal something. And I would say Alex Karp, you know this was coming, over the past couple of years has been a good semaphore, if you listen to him carefully, about what the trajectory of Palantir was going to be like. And as per Palantir's growth, it seems like that semaphore was a correct semaphore. Not bad at all. Palantir at $19, $18.99 right now. Not bad at all. Shareholders are doing pretty well on this, and let's see if we can keep it up. All right, that's it for me. Thank you, everybody, for joining. November 7th, 2023, another Tuesday Daily Palantir episode will be coming out in a couple of hours. Hope you guys enjoy the Market Open. I will see you guys tomorrow. Have a great, great day. And yeah, Mick goes into a semaphore when he reads my jokes. Bay Ray, I love you. It's all love. Thank you, everybody. We'll see you tomorrow on the Market Open. Have a good one.